If you've ever bought Bitcoin, looked at the final confirmation, and felt a hint of confusion, you're not alone. You put in a specific amount of money, but the Bitcoin that lands in your account is just a little less than you calculated. It leaves you wondering, wait, where did the rest of my money go? The answer, and the subject we're going to demystify today, is fees. When you buy Bitcoin, you're not paying a single, simple price tag. It's more like a cost with several layers, and some of them can be nearly invisible if you don't know where to look. There isn't just one fee. There are multiple costs that make up your final purchase price. To understand the true cost, it helps to think in 4 distinct buckets. These are the trading fee, the spread, the payment fee, and finally, the withdrawal or network fee. Let's break down each one. First is the trading fee. This is the most obvious one. It's the platform's direct service charge for handling your transaction and executing your buy order. You'll usually see it listed clearly on the confirmation screen as a platform fee. Next, we have the spread, and this one is much more subtle. The spread is the gap between the price a platform offers to sell you Bitcoin for and the slightly lower price they would instantly buy it back from you. Just like a currency exchange desk at an airport, there's a buy price and a sell price, and the platform profits from the difference. This is critical for beginners to grasp. That gap, the spread, is why a brand new purchase can show a small loss the very moment it's completed, even if the overall market price hasn't moved at all. It's not an error, it's the cost of the spread being realized. The third bucket is the payment method fee. This depends entirely on how you fund your purchase. Using a credit or debit card is often the fastest way to buy, but that speed and convenience almost always come with a higher cost. A bank transfer, on the other hand, is usually slower, but is almost always the cheaper option. A good rule to remember is that you're often paying a convenience tax. The easier and faster the method, the more you tend to pay. And if you're someone who practices dollar cost averaging by buying small amounts daily or weekly, remember that these costs can multiply. Each purchase incurs its own set of fees, and over time, those small droplets can accumulate into a significant amount. Finally, we arrive at the fourth bucket, the withdrawal or network fee. This cost only appears when you decide to move your Bitcoin from the platform to a personal wallet that you control. This is a separate charge from the trading fee. It could be a flat withdrawal fee set by the platform, a variable network fee based on how busy the network is, or sometimes a combination of both. That network fee is essentially a toll. Think of the Bitcoin network as a digital highway with limited lane space. To get your transaction included in the next block of confirmed transactions, you have to pay that toll. And just like a real highway during rush hour, when the network is busy and congested, the fees can rise. When it's quiet, they tend to fall. So with all these different costs, how do you make sense of it all and compare your options? The secret is to look beyond the advertised headline fee and calculate your effective price. It's simple. Just take the total amount of money you paid and divide it by the exact amount of Bitcoin you actually received. That number is your true all-in price per Bitcoin. That is how you compare services fairly, by looking at the effective price, not the marketing. Before you buy, run through a quick checklist. What's the trading fee? What's the spread? What's the cost of my payment method? And what will it cost to withdraw later? Knowing these answers puts you in control. Reducing these fees isn't about finding risky hacks. It's about building smart habits. Use cheaper funding methods like bank transfers when you can. Consider making fewer, larger purchases to minimize per-trade fees. And batch your withdrawals to your personal wallet to avoid paying network fees over and over. And be aware of common traps, like platforms that advertise zero fees but make up for it with a huge unfavorable spread. Or those that offer cheap buys but then charge extremely high withdrawal fees. Always look at the full picture. A crucial safety reminder is to never sacrifice security for a slightly lower fee. Don't chase the absolute cheapest option if it pushes you towards an unproven platform or risky behavior. So let's bring it all together. Your total cost is the trading fee, plus the spread, plus the payment cost, plus any withdrawal fees. Once you learn to see all 4 components, the fees stop being a mystery. They become just another part of the process, one you can now navigate with clarity and confidence.